Don't place a trade based on what you're seeing in this video because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Alrighty traders, so in this video we're going to have a look at just a bit of a market update around the markets, silver, gold, and also the indices as well too. Plus also I want to touch on a few things that I think a lot of people misunderstand about these markets and why they struggle to get ahead in these markets. And I still see this even from people that I see real estate investors trying to give you advice on the stock market, which is not their forte. So it's really interesting to see that. Like, I don't give you real estate advice, right? Like, because that's not my forte. You know what I mean? The trading is. So that's what I want to talk about here. Guys, if you are struggling with your trading right now, then I'm just giving away free access to my trading course. It's Grow the Markets by the Boss trading course. It's like 12 videos long. So very first thing in the description, click on that and you can get free access to that. Now let's have a quick look here. I'm going to talk about gold here, but gold actually created a bit of now this is for the short term, okay guys, short term. Last couple of videos I've done some long term stuff and what I think long term gold and silver and so on and so forth, right? But now we'll talk about short term here. The short term is, what do we see here? The short term, we see gold actually having a bit of a sucker rally, and this, I guarantee a lot of people would have suckered rally people into this here. And I'll talk a lot about this in just a minute here, a reason why this was a bit of a sucker rally here. But as you can see, right, what happened on basically last couple of days, gold actually started to break out. I guarantee a lot of people would have got in here. As soon as I saw that, I thought this is going to be a sucker rally. It's going to get people long, and then the market fell back. So right now, I believe we're getting a bit of a short-term top. Short-term top, meaning we're probably like I believe like I spend maybe well, again, we don't know, right? But it looks like we're likely to spend a bit more time just having a bit more of a pullback here out of gold, and then it's probably likely to continue this bull trend. Okay, long term, guys, I'm very, very bullish on silver and gold, but that's what I see there. That's gold there, and then also same for silver as well too, right? We had this nice run up, we ran straight back above this whole resistance level here. I guarantee as this thing was starting to run up, which again I'm going to touch in a minute, people started to get long here. I started to do videos, a lot of people started doing videos, and that's where people started getting it, right, after the market has gone up there. So when it comes to investing in these markets, that's a different story. If you're trading these markets where you're trying to get in at the right time and all that sort of stuff, then you got to be very, very careful. You got to understand how these markets work, right? Because and the best time to be getting into positions if you're looking to do that. And I guarantee a lot of people would have been stuck with silver and gold. Again, guys, last couple of videos I've been very bullish on silver and gold, and I still am, right? But short term, you got to understand how these markets work, okay? And so short term, I believe we're probably likely to get a bit of a pullback or a bit of a sideways movement, even out of silver right now, because we have had a nice run, a very, very nice run back to the high side. So that's what I'm seeing through there, and the same for the actual stock markets. Well, too, I'm just going to look at the S&P 500 here. I used the Nasdaq. Last week as showing as a slowing example here. But as you can see, right, we had this nice move up, and we're slowing. We're just really going slow. So this looks like it's getting ready to tip over and come and have a nice pullback through here. I'm not talking about a crash. I'm not talking about the stock market coming back down to 2,300. What I'm talking about here is just the market running up, having a bit of a pullback, and then now we're likely to maybe even pull back towards the 2,800 level there, because we're starting to slow. We're starting a nice move up, and again, you go back and watch my last video. You'll see what I mean by slowing of momentum there. Now, one thing I want to touch on in this video here is what so many people get wrong in these markets, and I see a lot of people that they don't understand the foundations of even getting in at a good time in the markets. And that is this, okay, guys? What a lot of people get wrong and is this, right? When the market goes for a nice run, okay, this is how the markets work. Market goes for a nice run, guess what happens? Profit taking, sellers come in, and we have a nice pullback, right? Then we go for a nice run. That's essentially how the markets work in variations, right? The market goes for a run, we have a bit of pullback. Goes for a run, have a bit of pullback. We go for a big run, then we have a nice pullback, right? And then we have a little pullback, and then we have a little pullback, and then we have a big pullback. You know what I mean? Like, it's just how the markets work, right? It's like, that's how they operate. So knowing that on the foundational level that the markets go through the peaks and troughs, the highs and lows, what a lot of people do is when they start to see something taking off, like they have been seen with silver and gold recently, they wait for it to take off, then they jump in. Then the market retraces, which is pure normal, by the way. Then they get stopped out. They say, oh, I knew the market wasn't for me. It's like, no, you got to wait for a nice pullback first and then get in on the next leg up. So I see this so many times. Like if I look at, say, for example, Microsoft has been very, 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 very bullish for quite some time now. It's now people are looking at Microsoft after the fact. If I bring up my weekly chart here, right? Like look at Microsoft. People are now looking at getting into Microsoft, investing in Microsoft right now, when this is just crazy. Like, why, if you're looking for an investing position, now is the wrong time to be getting into Microsoft, right? In an investing position. Why? Because look how high we are. There is a very high probability we're likely to see at least even a nice pullback out of this, because we've just been going up for so long. We've went up. And again, there's a very, very, very high probability that that's what's likely to happen. And it's really interesting that there's been some talk now. It's like, look how fast and high Microsoft has gone up. They look at the fundamentals. They look at all that sort of stuff. It's like, oh, well, I'm thinking about investing in Microsoft because it's been doing really well, thinking it's likely to keep doing well. It's like, no, this is when you're looking at this price here, this has just done too much price in a short period of time. So if you're looking for investing positions, you're better off investing in something like a stock that hasn't actually done this here. You know what I mean? Something like, if you're looking at like an Apple, for example. Right, look at Apple. Apple's just sideways, right? Not much. So we've actually, look at this here, right? We had a big run up, didn't we? Look at this here. It's actually very interesting. Look at this here. We had a big run up and then we had a nice pullback. We had a big run up and then we had a nice pullback. We had a big run up and now we're having a nice pullback. It's like, see how the market counteracts that, all right? We eventually, after a period of time, the market will have a nice, decent pullback. The market will have a nice, decent pullback. The market will have a nice... Now, we never know when that decent pullback is going to happen. And remember, looking at the weekly chart here, but just by understanding that foundations is that when you look at things like Microsoft, it's pure crazy to think that, okay, now is the time to start investing long-term in the Microsoft. No, the best time is what? Wait for a big dip in the markets, and then if you want to start to get into it, that's that's being smart about your investing. Make sense? So, and I see that with a lot of people, and so that's investing there. But even when it comes to like trading, right? That's investing. Investing means you're buying it and you're holding it for many, many years. Even with investing, where you're buying it and you don't really care about the day-by-day movement, you still want to get in at a good price, right? You still want to get in at a really, really good price. But when you're look at this Microsoft chart here, that's just nuts. People are, oh, Microsoft, after it's gone up, right? That's what a lot of people do. Please don't be the herd. Please don't be following like, oh, now it's gone up, now let's get in. Because that's what so many people do, right? It's exactly what happened with Bitcoin. It's exactly what actually happened with natural gas as well too. If I have a look at what is it? What's that? UNG, right? Look at natural gas here. Right, look what happened with natural gas recently, right? We had a big move up, right? And then we had a pullback, and guess what? A lot of people think we're going to go for another big run because what happened in the past is going to happen again. And it's like, no. Please, guys, please. And I've been seeing a lot of people doing this mistake, and they don't understand that just because something went up really, really quickly, in fact, if it does do that, we're likely to come down pretty, pretty quickly. And so stay away from that sort of stuff. And even if you're trading the markets, like let's go back to have a look at gold here for a minute. And I'll bring up this chart here. Look what's happened here with gold, okay? Look at how gold operates and look at how the market flows, okay? So if you're looking to trade gold, look at this here. The market goes for a run, then we have a pullback, then we go for a run, then we have a pullback, then we go for a run, then we have a pullback, and then we go for another run, and then we have a pullback, and now we're going for a run, right? It's like, and I'm not telling you guys what to do, but as you can see, right, that's markets flow in stair steps, as you can see, all the way through. So knowing that, if you're looking to buy something, don't wait for gold to be getting up to here and then start to get into it and then it pulls back, because that thing just might pull back through there, right? Wait for a nice pullback. And that's when I saw just recently on the gold chart, where I guarantee a lot of people would have got suckered rallied into gold, thinking it's going to go for another big run again. It's like, no, it's not ready yet. We haven't had enough time in the markets. And this is something that's so crucial to your success, guys, is understanding this one thing, that if the market goes for a nice move, a big run like it has here, all right, it's done a lot of price in a short period of time, and then we've only had this very small sideways movement. Yes, there's a 20% chance it's probably likely to continue, but there's an 80% chance that that's going to be a false breakout because we haven't had enough time going sideways, and then we're likely to do this here. And then that's when, guess what? Everyone else is getting stopped out because they went long here. Oh, that stupid YouTube video is wrong, right? Blaming everyone else. And then guess what? The professionals are looking to buy back into here and to see a nice move back up again. So guys, I hope you can understand this one concept of, it's called price and time, or when the market does, if you think about the market as energy, right? If the market has a big run up, it's used a lot of energy. So therefore it needs a lot of time, a lot of sideways, a bit of a nice pullback to rebuild that energy to go for another run. Makes sense? That's the reason why, look at this here. We had a nice move up, and then look at all this sideways period through here. What is that? That's energy building, right? It's building energy. And because we actually had, pretty much 6 months worth of time, worth of just building, resting, getting ready to go for another good run. That's the reason why we had an explosive move out of gold. It's not because of a cycle. It's not because of Fibonacci's or anything like that. It's understanding one concept of that the more time we go sideways and the more, i.e. the more energy we build in these markets, the more it's likely to be an explosive move once it breaks out. Makes sense? And I saw this, and a lot of people just, and I'll give you an example here of that. Let's go and have a look at, actually, you know what I'll do? Let me just share with you a few recent trade examples that have come up in the last week. I'm going to share this with you, right? These are just trade examples that I'm going to talk to you through right now. These are the examples that me and my private clients go through. These are just like from last week. So I'm going to bring up my charts here, and I'm just going to bring up some recent charts that I've taken here, right? All right, look at this here. I just want to, you know what? Let's just bring this up here. All right, so I'm going to bring this stock up here. Again, this is the stuff that me and my private clients talk about, right? Look at this here. So the market, this is an hourly chart on Zebra, right? Market went for a nice run. Then we had a nice period going sideways. We had a breakout. Guess what? We went for a nice, then we continued down for a nice run, and it continued on from there, right? Look at this here. This is a great example. This is actually, look at this. This was actually, again, how do I say nice, right? Look at this here, nice pullback. Look at all that sideways period through there, right? I'm going to zoom this right in here so you can see it. See all that sideways period through there, all those small bars. It's not volatile. It's just a very, 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 very nice pullback here, right? Guess what all this is? This is what? Energy building. And notice here, right? Notice when we look at this here, right? We had a nice move down, and we had an even nicer move sideways, and then guess what? A big breakout bar, and look, and then obviously look at the explosive move, right? That thing just kept on going, and we had a very big explosive move to the downside. And you see this time and time again, right? Look at this here. Look at all this sideways movement, big breakout, and the thing just explosive. So whenever you get that, okay, whenever you get that nice sideways phase, it's telling you that we're getting ready to go for a nice run. I'll give you, this was a trade that I took last week on the Forex market, but I'll just share this with you here, right? Look at all this here, and this is just this is just a screaming example here. Look at this here. Look at all that sideways period through there. See how long it was? Sideways. Guess what? Breakout bar. And look how far that went for a run after it broke out, right? Why? Long sideways phases, when it's not volatile, it's just pretty much just sideways. Whenever you get that, that's energy building. whenever it breaks, it's likely to go for a big run. Now, guys, that's not a blatant statement, because you got to make sure you qualify this sideways phase here, because we have May gone for a big run before it. But again, guys, please don't just take a trade based on that, right? Because you need to know when to get in, all that sort of stuff, all right? But I'm trying to give you a foundational rule of where most people don't understand the foundations of how these markets work, so they can become a better trader to trade these markets well. Make sense? That's the reason why my trading system and the way that I trade is so high probability, is because I understand this one foundational concept that when the longer it goes sideways, the more energy it's building, that when it does break, we're now likely to go for a big run there. I'll give you one more example here. This is what actually happened. And this actually happened even just recently on Bitcoin. And let me just share this with you here. Right, so let's go have a look at, I'm gonna bring up Bitcoin. I don't have my crypto platform up, so I'm just gonna use investing.com here. And I hope you can see, guys, that once you start to understand these foundational concepts, it's not about, you know, and as you can see, right, this is where a lot of people really get wrong with these markets, and they do their head in, is because they do the opposite to what I'm saying here, right? They don't get in on a big pullback. They wait for the market to take off, then they get in. Then it's likely to pull back. Right? So let's go have a look at this here, right? And I'll share this with you here. This is actually a really, really nice trade that I took a while ago on Bitcoin. But let me go to, I'm just going to bring it up here. All right, and let's go to the, it's got to go to the daily chart. And I want to squeeze this back up to here, right? And this is actually a trade that I took, and I'll share, look at this back here, right? Right, so this is actually a trade that I actually did on Bitcoin. Firstly, right, look at this here. Notice how we actually had what? See all that long sideways phase? Not much happening. See that through there? All that long sideways phase, and then we got the breakout bar. Guess what? And then we had a very nice move down, didn't we? Look what happened. Look what happened recently, right? Sideways, not much going on. Again, this is just some simple stuff here. And then guess what? When did we get the breakout? Oh, look, breakout, right? Sideways, not much going on. Lots and lots of sideways. Breakout. It did nothing for a few weeks, and that's when we started to have a nice move up. Makes sense? So it's understanding. Oh, where did we go there? Go back here. All right, go back. All right, I guess you know what I'm trying to say there, right? It's that there. So, guys, this is gold, and the stock market does this because people are herd mentality in these markets. And if you want to become a good trader, it's so important that you trade the markets, incorporate of your trading in conjunction of how the markets work, and understanding these foundational rules of these simple things I'm talking about. Like, if the market has already gone for a big run, doesn't mean it's going to do it again. Okay. And that's the wrong time to be getting in, especially if you're trading, right? But then also understand the concept that the market needs some good time. The market needs some good resting phase to rebuild its energy to go for another big run again. Make sense? So I wanted to do a bit more of a detailed video here instead of just one little short tip and then let you go for a few minutes. I wanted to do a very bit more of a detailed video here to help you out, start you off this week on the right foot, because you can do so well out of these markets. You really can. But one of the biggest mistakes that most traders make is that they do the opposite to what we're talking about here, right? They wait for the market to go for a run, then they get in. Then it pulls back against them and say, oh man, stopped out. I knew the market was getting me. It's like, no, you got in the wrong time, right? They wait for the market to go for a run, then it goes sideways for a little bit, and then it goes for another run again. It hasn't had enough time going sideways. And then guess what? It's likely to be a false breakout. I guarantee so many people, oh, look, it's breaking up. Let's go again. It's like, no, it hasn't had enough time. We had a big run and small sideways. We need a bit more time. We need a bit more resting phase before it goes for another big run. Make sense? So that's what I want to see. That's the video that I want to talk about today, guys. I really care about your success, and I really care that you do so well out of these markets, guys. And if you want to become a good trader, then it's so important that you abide by the laws and the rules of how the markets work, and then incorporate a trading system based on that. Make sense? So that's what I want to talk about today, guys. You can do so well. Have an amazing week.